From April 2026, the UK tax system for landlords is changing completely, and most investors still aren't ready for it. Instead of filing tax once a year, landlords will have to report their income to HMRC every single quarter through digital software. Miss deadlines, submit inaccurate numbers, or stay on spreadsheets, and you could face penalties, admin stress, and cash flow shocks you didn't plan for. In this video, we're breaking down exactly what making tax digital means, who it affects first, how it links to your property strategy, and what smart investors are doing now to stay ahead of it. Here's the real issue. Most landlords still treat tax as a once-a-year admin task, something you deal with after the income is made. But making tax digital flips that completely. This becomes a live, year-round reporting system tied directly to your cash flow. There's also a myth that this thing only affects big portfolio landlords. Not true. From April 2026, it applies to anyone earning over £50,000 in rental income. That threshold drops to £30,000 in 2027 and £20,000 in 2028. So over the next few years, this will affect the majority of UK landlords. If you're building or scaling a portfolio, this is coming, whether you prepare or not. So what do you actually need to do? Well, step one is moving to HMRC approved digital software. Platforms like Xero, QuickBooks, or Free Agent will track rent, log expenses, store receipts, and submit quarterly updates directly to HMRC. What this really means is visibility. You see your cash flow in real time. You see your tax liability building quarterly. No surprises at the end of the year. Step two is adapting to quarterly reporting. Instead of one annual return, you'll submit updates covering April to June, July to September, October to December, and January to March. Each quarter, your software sends HMRC a summary of income and costs. You always know your estimated tax bill. Now that's a huge shift from reactive tax to proactive tax planning. Step three is thinking beyond admin. This is where experienced investors move ahead of the curve. They review ownership structures. They reassess their mortgage products. They align tax planning with acquisition strategy. Because let's be honest, compliance is step one only. Optimization is where the real upside sits. We're already seeing this shift with investors we work with globally. Portfolio landlords moving from spreadsheets to integrated accounting systems. Overseas investors restructuring purchases through companies for tax efficiency. Clients are choosing high-yield regions, but pairing that with tighter reporting and tighter forecasting. The ones preparing now are calm. The ones delaying will feel the pressure in 2026. And that bridges into the bigger point. Making tax digital isn't just a tax change, it's a portfolio management change. If you're unsure how this affects your portfolio, your structure, or your future purchases, this is exactly what we help investors plan for. At Joseph Mews, we connect you directly with tax specialists, mortgage advisors, and portfolio strategists who understand both UK-based and overseas investors. We help you stay compliant with making tax digital while also positioning your investments in the right region for yield, growth, and long-term performance. And yes, everything can be fully managed, so compliance doesn't become a second job for you. If you want clarity on what to do before April 2026, book a strategy call with the team. We'll map your next steps, your structure, and your reporting setup. Click the link below to get started, and make sure you subscribe so you stay ahead of every major UK property and tax change coming your way. Thanks a lot.